Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. What is going on with gold and silver? It's in the green right now, but prices seem to be very wishy-washy. So this article is talking about a new high in gold leads to a significant correction. How prices are just going up and down and up and down. Now, you never want a market to just keep going up, because that's a huge red flag that there's going to be a huge crash happening. Just like Bitcoin, just like $50 silver in 2011. So their corrections are supposed to be healthy in a market, but there's been so much volatility that it's absolutely insane. And for anyone who's trying to trade or to keep a pulse on the day-to-day price action, you're going to be driving yourself crazy. So sometimes it's best to take a step back, just, be rational about your decision making, how you're investing, your strategy, and maybe just holding off. Sometimes it's better to just hold. Right now, it still is a great price for if you're trying to buy, but make sure you're stepping back and becoming aware of impulse buying and panic selling, because those are surefire ways to definitely put yourself in the negative or in the red. So this article from Seeking Alpha is talking about how a new high in gold leads to a significant correction. It's talking about how the risk-off rocket fuel for the yellow metal turns into a dud, how gold stops just below the $1,700 level and tanks. Usually this is due to people capitalizing on some profits, just taking their profits as it's high, especially with people that bought around the $1,400 level. That's a several $100 profit, so they're not complaining. Stocks have seen the worst weeks in years, so stock markets are definitely down right now, which could help precious metals, but it seems like it's not doing or affecting the markets as much as we wished, as the precious metals investors wished. And junior gold mining shares follow the yellow metal. So anyways, let's jump into this article. The link will be in the description. The final week of February began with a giant thud in markets, which only got worse as the week progressed. The spread of the coronavirus to South Korea and Italy created panic selling in stocks and commodity markets. The DJIA dropped over 1,000 points on February 24th and continued lower throughout the week. The coronavirus was a trigger, but the selling created the environment for the plunge that followed. Crude oil, which had been taking the stairs higher from below the $50 level earlier this month, just got the elevator back to the downside and fell to a new lower as it approached its late 2018 bottom by the end of the week. Agricultural commodity prices experienced pressure, and copper fell to the $2.50 per ounce level, or per pound level. There was price carnage on the first day of the final week of the second month of 2020, and the days that followed got worse. Risk-off conditions gripped markets across all asset classes. U.S. bonds rallied in flight quality, and gold and silver posted gains initially. The yellow metal rose to over $1,700 per ounce, which was a new high and the highest price in 7 years on February 24th, before correcting significantly lower. So much has happened in the economy, in these markets. People are just trying to figure out what is the right move, because right now there really is no say. You can use the chart standpoint from it. You can look at it, try to look at it statistically or realistically, but the unknown variable, it has to be incorporated, because there's just too much going on to really tell. Now, hopefully, since stock markets are down so low, this will give a cushion to precious metals to at least stay in the green somewhat, but who knows? See, the bull market in gold began in the early 2000s, but the next leg to the upside started last June. Falling interest rates in the U.S. and around the world lit a bullish fuse under the precious metal that central banks hold a part of the foreign currency reserves. The Fed may have no choice but to take significant action to stimulate the current environment, and that's what we're talking about. Central banks and the Feds, they have to do something. They have to do something to stimulate, to pump some money in these environments, because we're losing so much money from imported to exported goods from the economic growth, or the slowdown of the economic growth that's happening because of the coronavirus. So the VanEck sectors, or vectors, junior gold miner ETF, the GDXJ, fell like a stone. Risk-off rocket fuel for the yellow metal turns into a dud. At first, the selling in markets across all asset classes lifted gold. On Monday, February 24th, the price of the yellow metal rose to a 7-year high. See, as the daily chart of the nearby gold future highlights, the nearby contract reached a high of $1,619 on January 8th as tensions flared between U.S. and Iran. As the situation calmed, the price fell to a low of $1,551 on February 5th, where it ran out of steam on the downside. As the fears over the coronavirus rose, the price of gold moved higher. On February 20th, the yellow metal moved above the January 8th high. On Monday, February 24th, the price spiked $1,691 in what was a short-term blow-off top. See, the price momentum in the relative strength indicators rose to overbought levels, but turned lower as the price collapsed throughout the week. The total number of open, long, and short positions in the COMEX market moved higher from 650,392 contracts on February 5th to 722,000 on February 27th. Meanwhile, the metric likely dropped on February 28th as selling accelerated gold futures markets, taking the price to 1,564. So there was huge momentum in a lot of overbought or oversold territory when the prices got that high, because not everyone, some people like us, the long haulers, weren't selling, but a lot of people were selling, were taking those profits. So gold stops just below $1,700 in the level in tanks. That's kind of what I was just talking about. The last time we saw the price of gold above $1,700 level was in December of 2012. So we haven't seen this type of gold in a long time. A lot longer than a lot of us have been stacking. So this has been the highest price we've ever seen gold in our stacking journey. So it makes sense that a lot of people sold. They're like, this is what I've been waiting for. I bought at $1,200-$1,300. It's $1,700 now. Shoot, that's $400 or $500 profit. I'm out. Peace. The quarterly chart of the COMEX gold futures illustrates the continuation of a bull market price action since the yellow metal broke out to the upside in June 2019, when it rose above critical technical resistance at $1,377 per ounce. While $1,700 is a psychological level in the gold market, above there, the next technical target will be $1,785 and $1,805, the peaks of the final quarter in 2011 to 2012. That band stands as a gateway to the all-time high at $1,920 and new highs in gold. When it comes to the technical indicators, price momentum and relative strength have risen in overbought territory, which I was mentioning. However, the metrics can remain in overbought condition for a prolonged period, as we witnessed from 2004 to 2011. So even if it is an overbought territory, it doesn't mean it's going to make the price go back down. See, now stocks have seen the worst weeks in years, and this is definitely what's very interesting. The stock markets turned ugly during the final week of February 2020. The market participants had not experienced the level of risk-off price action since the last quarter of 2018, when the U.S. interest rates weighed on stocks and markets across most asset classes. So several years we haven't seen this. And the weekly chart of the E-mini S&P 500 futures contract show that the sell-off that caused implosive price action last week was the most significant move in years. So, this is talking about, stock markets, how the stock market's crashing. But I'm curious to see where this is all going to lead. Just like this little thing over here, is the coronavirus affecting your portfolio? It can, and it probably is, especially depending on what you're diversified into, because it's definitely affecting stock markets. It's definitely affecting, all markets across the board, but you got to think about the bigger picture. I think on a grand scheme of things, if we can go in the future and look back on these times, it really is just setting up for something much bigger than we can comprehend. The stars are all aligning, and it's looking towards gold and silver. See, even though stock markets are volatile, precious metals, especially silver, have more potential because of their fundamental uses, because of their intrinsic value, because of what they bring to the economy, especially from a silver shortage standpoint, to an intrinsic value standpoint, to a basic monetary value of our dollar crashing and gold and silver being the real store of value, especially as a safe haven investment. So I'm curious what you guys think about this. I definitely think it's a very overwhelming time in these markets, just as there's so much going on, and they all look to be pointing towards the downside of most markets. But gold and silver are in the green right now, alongside with platinum and palladium. So that's probably due from stock markets crashing so hard. People are trying to get that safe haven experience that they can find in precious metals. So anyways, like I said, the link to this article will be in the description if you want to check it out yourself. Make sure to smash that like button. Make sure you subscribe if you're new, because I do post daily videos. I'll be doing a giveaway soon, so stay tuned for that as well. That's why you got to make sure you subscribe. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.